Hello traders, how's it going? So today we're going to be talking about dynamic resistance and dynamic support. Sorry, this was a wrong spelling, but I was supposed to write EDA instead of A. But that won't be a problem. So let's dive into what we had today. So we have talking about dynamic resistance line and dynamic support line. So these are like chart patterns or waves we do see in the market or patterns we do see in the market. And what does this patterns mean? So in today's price action video, we are going to be talking about swing highs and swing lows dynamic resistance line. So this right here is an equal highs. This right here is a slope going to the downside, and this is another slope moving to the upside. So I want you to see this highs you see, this highs you see, this highs and this highs as your resistance. Even though it's not perfectly aligned, even though this ones are not aligned the way these ones are, see this slope as your resistance. If price keep coming to this price level multiple times, is either going to show you that the buyers market wants to break out. But let me leave that aside. So first of all, I want you to see that as your resistance. Why? Because there's a sell pressure in the markets, and the buy pressure, the buyers were not able to take out this previous high. Like these previous buyers, the buyers that started here were not able to take out this previous high, and the market did what? It pushed to the downside. Seeing this serious buy pressure, these sellers were able to take out all the previous buyers, all the initial buyers at this price level. The sellers were able to overpower them. The buyers came one more time trying to go up, but they were not able to break past this high, and the market went to the downside. It has created the first touch, second touch, and we are going for the third touch. The sellers one more time came in with the aggressive movement going to the downside. This is momentum. This is what you want to look at for. This. So when I'm talking about momentum in this price action course, I'm going to be going deeper into momentum. How you're going to be able to read the charts, looking at the market momentum, the same way we're talking about range. So you can see one more time they were able to take price below this earlier buyers. These buyers you see here, they were able to push price below them. So the same with this. On this occasion, the market is already moving to the upside. It moving to the upside is creating what? Resistance. If this market was to come to this price level, and let me say do something like this, it has created multiple resistance. Maybe this might now be our breakout. You get it? Because I have one, two. You get it? In most cases. And mind you, it's not always going to be aligned the same way I aligned it right here. In most cases, it might even be like this. Yes, in 90% of cases, it might be like this. Because one, two, two, one, two is most what you're going to be seeing in your chart. This is going to serve as your resistance, and this is also going to serve as your liquidity. Yeah, but in this situation, I'm just going to use as an example. You get just to show you how many touches you get. So this is your swing high, and this is your resistance. This high, this slope to the upside is your resistance. The more the market keep pushing it to the upside, the more that resistance level is valid. Are you getting it? That is it. So let's talk about dynamic support line. So the same way I explained to you guys about dynamic resistance, that is almost the same thing with the dynamic support line. You get, we have equal lows. This is your dynamic support line. This swing low, this equal lows here is your dynamic support line. So coming over here, same explanation, vice versa for the dynamic resistance line. You can say the buyers were able to push price to the upside. You get, so this is your swing low, your swing low, your swing low, your swing low. Liquidity traders, SMC traders are going to call this sell side liquidity or sell side liquidity. But just for us to understand it on the more basic level, we call it swing lows and swing highs. So this is a swing low, swing low, swing low. You can also call that you can also call this higher lows, higher lows, higher lows. This also you can call it lower lows, lower lows, lower lows. You get it? But swing lows are all equal all of this. You can see that the buyers were able to keep pushing price, and they were able to break price below this previous low. So this is your dynamic support line. Are you getting it? These are going to be your dynamic support line. So now let's get deeper. Let's go deeper into it. So when you're marking your dynamic support line, There are things you need to have in mind. Whenever your dynamic support line is on, like, it's a dynamic channel, we talk about dynamic channel right now. You are either marking your support with dynamic resistance or your dynamic support. There's two four things you need to have in mind. That all you need inside the dynamic channel is just four touches. Four touches, and I advise you, be prepared for a possible breakout. If you are marking your dynamic channel, let's say you mark your trend line, you mark your trend line upside and downside. You want to start. You want to start from here, when the dynamic started, when the channel started from. This is where the channel started from this price level. 1, 2. You have had your first two touches. The upside has its first two touches. Good. Expect a possible breakout to the downside or to the upside. But in this situation, you might expect a possible breakout to the downside. Are you getting it? So you want to count your first dynamic resistance. You have two dynamic resistance. 1, 2, 1, 2. And I've taught you guys in these cases, most especially in the dynamic channel, you might see it double equal highs or equal lows. You might see equal highs or equal lows. In this situation, you might see equal highs here, but you might see the market forming equal lows. And the market might go up, come down, form equal lows. You get, you will not mark those equal highs or equal lows as two. You will mark it as one. Are you getting this? Let's take for example now the market at this price level. It formed something like this. This is just an example. This is just an example. Form something like this, which you will always see. I advise you go to your chart. You always see something like this. Something like this or any of this price level. If you're not seeing it here, you might see it here. You might see it here. Something like this. You get it? But this is just an example. Why I'm doing it like this, I'm not going deeper. I'm just trying to explain to you guys how a dynamic channel and how many candlesticks you need to, how many touches you are going to be counting. You get, all you need is four touches. If you're getting more than four, believe me, that dynamic channel might have broken out. There might already be a breakout that you are not placing the line properly. Maybe you did not place your line well. But once you place your line properly, you place this line properly from where it actually started from. That is from here. You get it? There is no way you won't be notified or you won't see when there's a breakout from this dynamic channel. Are you getting it? So it must be four touches. 1, 2, 1, 2. That is all you need. So on the last part of this video, we're going to be talking about variations of dynamic channels. So we have three main variations of dynamic channels. So we have the upward variation, the downward variation, and when the market is consolidating. When the market is on an uptrend, when it's on a downtrend, and when it is ranging. So on the next video, I'm going to be talking about breakout and how you can adjust your dynamic channel once there's already a breakout for you not to miss where the market is going to be going to next. Once there's a breakout out of your dynamic channel, this is a dynamic channel. Once there's a breakout, how you can easily adjust your dynamic channel line so that you will not be mistaken or you won't get confused. So you also move with the market immediately the market has broken out of a dynamic channel. But have it in mind that this is the three main variations of dynamic channels. So I hope this video helps out, that maybe at least has helped your knowledge about the forex market. If you have any questions, you can leave a question, your questions behind. Thanks for watching.